Hello and welcome to the Cryptocurrency News channel. It's going to be the Bitcoin TAFA and chart analysis for December 27th, 2021. Christmas is over, New Year's is on the way, and we're going to actually discuss why the small consumer confidence that they've been reporting is complete and total BS, and why I'm actually bullish going into the new year and after the new year. Now that doesn't really have too much to do with technical analysis, but it'll have to do with fundamental analysis, which I will actually mention later. Right now, let's actually go into the technicals and the charts right now. So right now what we see is that the segment up is definitely like starting to look a lot more bullish than just like a random segment up. I think the trend is probably reversing, and that's more of a psychological thing, not really a TA. It's not really that much of a TA thing. It's more of a psychological thing with people seeing that Omicron and others have no effect on the actual market, or very, very little effect on the actual market. And the whole thing about consumer confidence being low is complete and total BS. So like I said, because China didn't kick all the miners out, we're not going to have this long thing. And it looks like this lull is about to end, honestly, because we went up from like 45,000 to 51,000. I think the biggest rise here was from 33 to 40, which is almost the same. Amount. But I don't think this one's going to slow down as much. I think there might be a slight dip, but I don't think it'll be quite as great as the dip from like 40,000 to maybe like 28,000 or something here, because once again, the miners didn't get kicked out. And the economy overall, the stock market overall, seems very, very strong. So if you want to get into crypto, definitely start DCing in right now. Like, don't wait until 42,000 or whatever, because you might not get it. Don't go all in, and don't go all in right now, but definitely DCA in right now, so you still have some money left, just in case it does actually go down. But right now, like, the market right now seems a lot stronger than what people expected, and it's expectations that really matter. It's like, oh, we expected X, but now we have X plus 3, so now the market is going to go up. You see the stock market going up right now, and the crypto market will reflect the stock market, not really because crypto follows stocks, but because the stock market represents overall consumer confidence, and if consumer confidence is fairly high, people are much more likely to buy investable assets. I know people have been like, in surveys, consumer confidence has been low, but that doesn't seem to line up with reality on some of the numbers coming out from the overall market. And we'll talk about those after the TA. So the oscillators are actually leaning quite positive. The commodity channel index, it's above 100. So it's a definite, it's about overbought. It says neutral here, but it's actually overbought. The stochastic is also overbought. The average directional index is fairly low. So there's a small chance that it is actually overbought, and it will actually have a slight correction, because the stochastic above 80 is overbought. The commodity channel index over 100 is overbought. The average directional index is stronger than it has been, but it's really not that strong. Now, the awesome oscillator, we have to pay a lot of attention to now, because it's getting towards positive. The awesome oscillator has been negative for a couple of weeks now. So it turning positive would actually signal a reversal in the trend to definite positive. So if this actually becomes positive tomorrow or the next day, then like, I think it's more of a positive trend rather than just, like a bounce or something that might actually retrace. So keep an eye on the awesome oscillator for the next few days. The moving averages have moved to strong buy. Everything on the 10, 20, and 30 has moved to buy on the daily. For instance, the 10 EMA is greater than the 10 SMA, and we're above the 10 EMA. Same thing for the 20, and same thing for the 30. So like, on the daily for an entire month, we're actually in a fairly strong buy territory. Obviously, for the 50, 100, we're still in the sell territory, but the 200 is the one that people look at, and we're strongly buy for 200 now. So we're above the 200 SMA, we're above the 200 EMA, and the 10, 20, 30 all signal buy. So throughout the rest of this year, I think it's a fairly strong buy signal. I still don't see a huge amount of like price movement from here until New Year's Day, but I think my chance of being wrong is going up, because people might be building on those momentum. And I still think that after the new year, it's going to be fairly positive because of the reports I've been hearing from the market. So on the 1 week, what we're at right now is like the 10 weeks is still on sell, but we're actually getting towards a pretty strong buy point. The 10-20 is still on sell, but we're actually getting close to a buy point. we're at 51,600. We just have to get past 52,700. But right now the EMA is lower than the SMA on both, and we're still we're still below the EMA. However, we're getting very, very close to the EMA on the 20. And the 30 is highly positive. So is the 50, 100, and the 200. The 50, 100, 200 I don't really look at. But the 30 turning positive means that a correlation trend could actually be, well, not a correlation trend, but like a positive trend could definitely be building. Let's see if we can break 52 or even 53 in the next couple of days, because that would signal a lot more positivity. I think that would actually put us on a positive track for the 10 EMA and the 20 EMA. So 53 would be like that magic number, and we're only 1,500 away from it. So basically on the 10, 20, we're on sell, but 30 onwards, we're on a buy. And the 30 is somewhat important, but the 10 and 20 are more important for the weekly for me. So right now the weekly still seems to indicate sell, but I think the trend is actually reversing itself. So that's why I say, like, until the new year, I don't see too much movement, although my chances of being wrong are getting significantly higher. But after the new year, I definitely see this trend reversing. So that is the weekly. On the monthly, we're still very positive. All the indicators scream buy at this point. We're getting pretty close to overbought on the stochastic, but everything else is pretty good. And the commodity channel index is once again getting stronger. And the awesome oscillator is going more positive. So a trend could actually be building on the monthly. The exponential moving average is still lower than the simple moving average for the 10-month. But the thing is, we're above both, so we're very, very positive. The 20, 30, from 20 on the monthly, it's not really worth looking at because that's multiple years going back. And that's not going to change unless you have a multi-year bear market, which we aren't actually in right now. So right now, like, the monthly is strong buy. So if you're buying for, like, planning to hold on for a year, this time next year, it's still a very, very strong buy, as it has always been. So once again, daily is looking a lot more positive, but that's countered by the weekly, which is still negative for the 10 and 20. However, if we get above 53,000, we're going to be positive for both the daily and the weekly and the monthly, and that's going to be all positive from here on out if we actually get past that $53,000 mark. Now, back to the fundamental analysis, because I actually really want to talk about that right now. If you've been watching CNBC, the Christmas holiday sales were the strongest they've been in 17 years. And just as important, gift card sales this year were up 43%. So what that means is, like, this whole consumer confidence thing is completely BS. They're like, consumer confidence is really weak. Consumer confidence is not weak. If consumer confidence was weak, they wouldn't be buying all this crap. But they are buying all this crap, so the consumer confidence is definitely not weak. If the consumer confidence was weak, we wouldn't have the best holiday sales period we've ever had in 17 years. So people are basically talking out their ass. They're saying one thing, but they're doing another. And what they're doing is what's important, not what they're actually saying. It's pretty apparent to me that Omicron really hasn't affected very much. Now, it's affected the travel sector, obviously. So people are buying less experience-based stuff like vacations, but they're buying a lot more stuff like physical stuff, like presents. So their lack of buying in the experience sector is completely basically outcompensated by their increase in buying in the stuff sector. And the stuff sector, obviously, is very, very, very important. So that's what we have right now. And January should be pretty strong, because the gift cards were up 43%. And if the gift cards are up 43%, that means people are going to be using those gift cards in January. So the figures for January should actually be pretty strong too on the overall market. And we know that the crypto market is at least somewhat correlated with the overall market, because consumer sentiment is the same for both markets, since crypto is mostly looked as an investable asset and not really currency right now. So that's why I believe the rest of December and January will be strong. I mean, previously I had thought it'd been weak because all the reports are that the consumer confidence was really weak, but that's complete BS, as we've seen from the holiday shopping season. Best holiday season shopping season we've had in nearly 2 freaking decades. So that's why I'm suddenly bullish again. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.